welcome back to another episode of Chat with Brandy. This is episode number 10, and I just want to take this opportunity to say thank you so much to all of you that have been watching these last 9 videos and who have given me, wonderful feedback and suggestions on future videos that you would like to see. And, the whole point of me doing this is to bring value to you guys. So you confirming that it's valuable and giving me ideas for things that you would like is super helpful to me. So thank you for that. So last week I showed you how to calculate your net worth, and we talked about setting SMART goals. And I think that would help you make the most out of your life and business. So if you missed that video, check it out. The next couple weeks, we are going to cover everything rental properties. So we're going to break it down into 2 different videos. Today, we are going to talk about sharing your own home with a renter. So whether that is having a completely enclosed suite or just a room in your house, whether you're signing, a year-long lease with somebody or you're doing a AirBNB-style short-term rental situation. We're going to cover all of that today. Taxes, insurance, best practices, how to protect your assets, all of that stuff. And then next week, we will talk about rental properties that aren't part of your own home. So completely separate buildings. So if you are thinking about building a suite in your home, or you already have one, or you're thinking about buying a house that has one, this video will be for you. If you know somebody like that, share this video with them, and I think it would be very helpful. So today, you're thinking about sharing your house with a renter. You're opening your door to renters. So secondary suites are a great way to help you pay your mortgage and property taxes, as well as provide a lower cost housing option for your renter. If you're thinking about buying a house with a secondary suite or building your own, there are lots of stuff that you need to know. So we're going to kind of cover 4 topics today. So the first one is going to be permits. So zoning and permits. So this is relevant to Edmonton, City of Edmonton residents, okay? So in Edmonton, the construction of a secondary suite requires both a development permit and a building permit. Okay, so the building permit is if you're building a new suite. So if you're just renting out a room in your house, you don't really need to worry about this permit part of it, but this is more for like the self-enclosed suites, okay? So if you would like to build a secondary suite in your home, you need to first make sure that your house is zoned properly. So it used to be that only completely detached houses would be zoned properly for this, but as of August 2018, they are now allowing semi-detached row housing and duplexes to build their own secondary suites. So the first step would be to check the City of Edmonton's website and make sure that your house is zoned properly for this. So either the house that you're living in now or the house that you're thinking about buying. I will link that website for you later. And then the next step, once you've determined that the house is zoned properly, would be to get your development permit. So if you are hiring a contractor or contractors to build your suite for you, they're probably going to take care of the building permits part of it, but you should get a head start on the development permit side of it, because the City of Edmonton can take like 6 to 8 weeks to get that done, and so you kind of want to get a head start. The fee for the development permit is $283. So make sure that you keep a receipt for that, because that will be deductible against the rental income for the year. If you're buying a place that already has a suite built in it, you can still check on the City of Edmonton website to make sure that the person has pulled the proper permits to build that suite. You want to make sure that your suite is legal before you start putting renters in it, because if it's not legal and something happens with the tenant, or there is a fire or something along those lines, it's going to be a massive headache for you. So it's good to make sure that you're compliant before you get a renter in there. Okay, so now that you've got your development permit, then you can start pulling building permits if you're doing that on your own. If you are wanting to do an Airbnb-style rental, okay, regardless of whether it's just a room in your house or an entire suite, I would assume for most Airbnbs you would want a self-enclosed suite, but that's up to you. But the City of Edmonton requires that you have a home-based business permit. Okay, so they say if you're running a short-term rental out of your home, you're actually running a business. So they need you to apply for that permit. It also takes quite a while to go through for the major ones. So again, get started on that right away. It's $316. And again, you can use that as a deduction, and I will link all of this information for you guys later. Something that's kind of in this category as well that is interesting to know is the City of Edmonton has a grant for people building affordable secondary suites. So the grant will cover up to half of your building costs if you rent to somebody under a specified income threshold. So that's pretty cool. I will link that information for you guys to check out later. Also, I just wanted to mention that if you are not in the City of Edmonton, just Google your city and, secondary suite permit requirements, and you should be able to come up with something to figure out how to get compliant there. Okay, the second one we're going to talk about is insurance. So the reason that I put insurance as number 2 is because you should really be thinking about insurance before you even start construction or before you even buy that house, okay? So in preparation for this video, I interviewed my friend Sarah, who works at Allstate Insurance. She graciously answered all of my questions and also allowed me to share her contact information with you guys as an additional resource in regards to the insurance part of this. So of course, I'll link that information later. Your insurance company needs to know, again, before you even start construction, if you're doing any major renovations on your house. It's in your agreement with your insurer that you would let them know that kind of thing. So not letting them know that can void your policy, okay? They will probably place an additional rider for the duration of the construction. And then of course they'll put a different rider on when the construction is completed and you just have a renter in there. The other reason that you'll want to talk to them before setting all of this up is to get guidelines on their requirements for an in-home suite. So if their guidelines don't match up with what you want to do, you might have to look for a different insurance company, right? So for example, Sarah told me that Allstate requires, sorry, I had the little list here. Allstate requires a year-long lease and that the tenant have their own insurance. So those are things that you want to ask about. Do they have a policy for lease lengths? Do they have a policy that the tenant needs to have their own insurance, which is a really good idea for landlords to have that as a policy in your lease as well. The other thing that she told me to ask about is whether or not the insurance company has any problem with pets, particularly certain dog breeds. And then also if they have a limit to the number of tenants that they would allow living in the suite. Okay, because that's all going to come into play when you are doing up your own lease agreement. If you're thinking about doing short-term rentals, like Airbnb kind of style stuff, my recommendation is to call a brokerage because they are going to have more products to offer you, and they'll probably have something that will cover a short-term rental situation. You should know Airbnb, so I'm specifically talking about Airbnb, but all of these short-term rental places are pretty similar. Airbnb in particular has a damage protection sort of policy. You should not consider that insurance, okay? They, in fact, so theirs is called host guarantee. It stipulates that you must make an insurance claim before you make a claim on the host guarantee. And any money that you receive from either that claim or the security deposit would be reduced from the host guarantee payout. So again, you should have an actual insurance policy in place. For brokerages, I would personally recommend Drayton Insurance, and I will link that contact information as well later. The other thing you're going to want to talk to your insurer about is getting a quote on your premium increase, okay? So that way you can build that into your plan for how much you're going to be charging for rent. So don't worry, we'll get more into that part later, but Sarah at Allstate advised me that there certainly will be an increase in premium, not only because now there's 2 suites to cover instead of 1, and there's probably a second set of appliances, maybe some furniture that you've put in there. The value of your home will likely increase after the renovation. Sarah also let me know that if you're not actually building a secondary suite and you're just renting out a room in your house, it probably won't be as big of an increase in premium, but you should still let them know because you want the tenant's contents and liability covered, as well as it's just going to protect you in the event of a claim. Like, it's just never a good idea to leave information out when it comes to your insurance policy, okay? It's also important to note that most insurance companies will not cover any form of tenant vandalism or theft. So it's really important for you to have an appropriate damage deposit in order to protect your assets. But be aware that in Alberta, you can only have your security deposit as high as 1 month's rent. So again, it's something to consider when you're looking at the whole pie, right? Okay, let's get into number 3, leases. So now that you know your insurer's requirements and you have all your permits in place, you can start planning out your lease agreement and how much you're going to charge for rent. So here are some things to kind of consider. So one, the ideal number of tenants that you want, whether or not you're going to allow pets or children, okay? The next one would be the rules that you have in your lease. So this may include where the tenant may smoke on the policy, when or how guests are permittable, parking, late rent payment, like penalties for late rent payments, noise allowances, all that kind of stuff, okay? I will attach a sample lease agreement for you guys to use as like a start off point, but also make sure that your rules are in compliance with the Residential Tenancies Act. For example, typically a landlord must give 14 days notice to evict for unpaid rent. So you can't put in your lease, I'm going to evict you 1 day later, right? You have to be in compliance there. If you're doing a short-term rental, you're obviously not going to be signing leases with your tenants. They're agreeing with Airbnb's, policies or whatever service you're using. So make sure that you're reading those terms and conditions very carefully so that you understand them fully. The other thing that you need to heavily consider when doing a short-term rental is your neighbors, particularly if you are in like a condo associations type thing, because it could be against their bylaws to allow that. Hopefully that would have come up when you were applying for your city permits, but you never know. So it's just always a good idea to be checking out that stuff. Okay, the next thing that you're going to be looking at is the amount of rent you're going to be charging. So I have a couple tips in this area. So obviously my biggest goal for you, and it should be for yourself, is that you're profitable in this, especially if you're investing. Like if you're buying a new house with the idea that this is going to be profitable, or you're putting money into a basement suite, that the idea has got to be that you're going to be profitable. It's just like any other business, right? So you don't want to be charging more than what the rent is worth in your area, okay? So you're going to have a hard time finding a tenant in that situation. A great resource to check this out is a website called rentometer.com. You can plug in the number of bedrooms and your address. It searches your area and tells you what the average rent is for that particular size of house, okay? You can also check places like Kijiji and Rent Faster. For a short-term rental, again, check out similar listings to get an average price, or you can do this calculation. No. Okay. So you would add up all of your total house expenses, so your mortgage, your utilities, your property taxes, your insurance, all that stuff. You would divide it by the percentage of space the renter uses. So if it was your basement suite, that would probably be half. And then you would divide that by 30 days. So that would tell you your daily cost of having that rental suite. So that would give you a good starting off point to figure out your nightly rate. Also, okay, so when it comes to security deposits, I already kind of talked about that with the lease, but with Airbnbs, there's not a damage deposit, it's a cleaning fee. So you would kind of have to figure out how long does it take me to turn over this part of my house for a new tenant, and then you can kind of base your cleaning fee on that. And as far as I know, you can change that cleaning fee as many times as you want with Airbnb, so it might just take you a while to kind of figure out an appropriate cost for that, okay? If you feel like you need more information, I will link the entire Residential Tenancy Act for you guys to read. But also, the City of Edmonton offers a landlord course. So it's either $100 or $125, depending on what day you want to go. But it covers it covers the act, it covers all your obligations and rights, the tenant's rights, how to end the tenancy, how to handle disputes, that kind of stuff. They also offer forms that you can purchase, such as notices to enter, eviction notices, rental increases, that kind of thing. So I will link those brochures for you guys later to check out. And again, any fees that you pay for that kind of stuff is going to be deductible. So make sure that you're holding onto those receipts. And that brings us to taxes, which is all of our favorite subject. So regardless of whether you choose a fully enclosed suite or just a bedroom in your house, if it's a fixed term lease or a short term lease, you need to report the rental income on your tax return, of course. Okay, but there's kind of two prongs to how rental is taxable to you, especially when it's part of your own house. Okay. So when your house becomes a partial rental, so even if it's just a bedroom or if it's an enclosed suite, okay, it has a different tax status as it did when it was just your principal residence. So kind of how it works is when the moment that it becomes a partial rental, okay, CRA deems that you have sold that part of your house to your rental business, okay? So we have to report that on the tax return for the year that it happened. So there won't actually be a tax implication for that year because you're selling a principal residence, and there's like that is tax exempt, okay? The reason that we do that is because it gives us our adjusted cost base. So it tells us what the value of your house was when it became a rental. This will become important later when the house either sells or it gets converted back to a principal residence, okay? So when the house is sold or it gets converted back to a principal residence because you decide that you don't want to rent out a part of your house anymore, another sale occurs. So then CRA is saying, okay, you've sold your rental property now, okay? So at that point, we would look again at what the value is in that year. And if it's higher than this, that would result in a capital gain. If it's lower than this, that would result in a capital loss. Or if it hasn't changed at all, so let's say you rented out a room in your house, realized that the landlord life was not for you, and then converted it back within like a year, the value of your house probably hasn't changed too much, but we still have to record it, okay? So it's important to keep this information. Then there's the whole other part of it, which is your rental income portion that needs to be reported on your tax return. So I will link a handy spreadsheet, or it's not a spreadsheet, it's a checklist from my website that will show you what information to record, but I'm just going to quickly go through it now. So quick breakdown, you need to keep the following for each tax year. So all of your rental income that you've received. So this would be really easy if you have a lease because it should be the same amount every month. If you're going with a short-term rental, I think Airbnb keeps records, if you go with a different like HomeAway or whatever, I'm sure all of those services have some sort of record keeping ability. But it's probably important that you keep a spreadsheet of some kind or something. And also side note, Canada Revenue Agency has been known to ask these companies for those records to see if it matches up with what is on your tax returns. So just be aware of that. Okay, rental income does not include the damage deposit that you receive. It's not considered income unless you actually use it to offset repairs or lost rental income. So in the year that you receive the damage deposit, we don't report it. In the year that you use the damage deposit for something is when it becomes income, okay? If you make an insurance claim on the portion of your home that is a rental property and you get a payout, so let's say the whole house burns down and you get a payout for that, the rental portion of that, so if it was half of a rental, is going to be income. Or if it's just an insurance payout on just the rental portion of your house, that's going to be considered income as well. Expenses, you want to keep track of your expenses, okay? So this would be mortgage interest only, so not the principal. Property taxes, condo fees, insurance, advertising, licenses, permits, legal and accounting, repairs, utilities, office expenses, cleaning, keys, Airbnb fees, whatever. Obviously, I'm going to expect you to remember all of those things. You can look at the checklist, okay, to help you remember. Also, basic rule of thumb for me is if you're not sure if it's going to be deductible, just keep the receipt. And I would just rather you keep way too much than not enough, okay? And remember, especially a lot of times people will throw away their utility bills, but if you're sharing your utilities with a renter, that partially becomes an expense, okay? The other major expenses that you will probably incur, especially in the first year, would be the actual renovations and then any furnishings or appliances. Now, we don't expense all of those in 1 year. We amortize them or we calculate depreciation on them. But what is really important for you to remember is just to keep those receipts because we need to use them probably over the course of several years. So the bottom line is your rental income minus your expenses becomes taxable income to you. Now, if you are married, we can split that income between spouses if that's advantageous. Or sometimes in the first year of a rental, or if you just have a bad year, there will be a loss, which can actually decrease your taxable income and generate some tax savings for you, okay? So that is pretty much it for today. Remember to join me next week when we talk about rental properties that are not part of your house. Next Tuesday's video will actually not take place in the afternoon. It's going to be in the morning instead. But remember, if you can't tune in live, it's no big deal. You can always watch the permanent video later or read the blog. I hope that you found this video useful and entertaining. And I also hope that you have a wonderful week.